Hi there, good afternoon. This is the Mutual Fund Corner. I'm Mangla Malu. With me in the Mutual Fund Corner is Sumaira Abdi. Like every Tuesday and Thursday, we answer all your mutual fund related queries. Before we do that, a quick look at the markets. Well, the Nifty is pat steady at the 10,750 mark, lower by about 35-40 points as we speak. A bit of a recovery seen in the last few minutes. The mid-cap index, that's where the most amount of action is right now as we speak. In an otherwise weak performance for the mid-cap index from the start of this month, start of this year, the start of the previous year as well, there's been a sharp outperformance that we're seeing from the mid-cap index in just the last 15 odd minutes, most of that coming on account of financials. We have DHFL, which is seeing a sharp surge up around 16-17 odd %, and the other financials also doing fairly well. First up, we take you through the top stories, then we answer all your individual mutual fund queries. Markets in a somber mood, weighed down by weakness in the biggies like Reliance and HDFC Twins, though the mid-cap index comes off the lows of the day at the high point of the day. The Yes Bank stock posts its biggest ever intraday gain. The big overhang gets out of the way as the Reserve Bank finds nil divergence in its asset classification and provisioning for the FY18 loan book. DHFL shares see a sharp recovery from the lows after Joint MD and CEO Harshil Mehta clarifies to CNBC TV18 that his resignation is in line with the move to bring in a strategic partner, adds that he will continue to head the retail portfolio, which forms 80% of the company's loan book. Oil marketing companies are the big casualty today as crude prices top $64 per barrel. The entire PSU basket too sulks as the additional offering of the Bharat 22 ETF kicks off. Karur Vysya Bank shares plunge after the bank guides for elevated slippages ahead. NBCC and Repco Home Finance too take a big knock after reporting weak numbers. All right, with that, we hand it over to Sumaira, who is with a guest. Sumaira, take it away.
Mangalam, thanks very much for that. Morningstar India's Kaustubh Belapurkar joins in this afternoon as my guest will be answering all the queries that are coming in. Kaustubh, hi, good afternoon.
Hi.
Good to see you again. And we already have a caller who's through to us. So Message John is on the line with us from Bengaluru. Hi, good afternoon. How can we help you?
Hi, good afternoon. This is Meshik John here.
Go ahead.
Yes. So I already have an investment about 7,000 in mutual funds that has been split about 3,000 in Reliance mutual fund, 2 in Lenti, and another 2 in HDFC small cap fund. Now, this is something that I plan for my retirement in about 25 years from now. So the target is to achieve somewhere around 2 crores. So is this something that can be managed with this, or something that I can add more to it, or yeah, that's the first question.
Okay. And what is the time horizon? I mean, you're only 35, so I'm guessing you have, 25, 30 years to go?
No, I'm 35 right now. The investment plan is for more about 25 years.
25 years, okay. And you have, separately, you have another goal, right, which is of your child's education.
Right.
Do you want to tell us about that?
Yes. So another investment plan that I would like is for my child's education, probably in 17 years from now, somewhere around 50 lakhs for the education, and a small term of 5 years, somewhere around 2 lakhs.
Okay. All right. So, Message, the good thing is that you've clearly chalked out your goals, and not just that, you have a targeted amount that you're looking to achieve. So you're halfway through. The only thing, Kaustubh, is I'm not sure the current investments are going to yield the kind of returns that he's expecting, especially considering that the 2 key ones, which is his child's education and his retirement, are just about 5-6 years apart themselves.
Right. Sure. So, Message, so it's good to hear that he's kind of, broken it down. Okay, retirement is a separate bucket and the goals is a separate bucket. So, if you're just to do the math and you look at the numbers, 7,000 of an SIP that's running currently, I would say that he'll need to add on about 15% every year to the SIP amount, where he can then comfortably meet his 3 crore target over the next 25 years. That's for his retirement book. That's really on the numbers of the SIPs. If I look at the individual funds, he's got 2 small cap funds and 1 large cap fund. I would urge him to, start looking at a little more large cap and multi-cap exposure in his portfolio, because it's currently very, very largely skewed towards small cap. It's in excess of 70% of the SIP money going into small cap funds. So I would consider him moving, almost, it should be more than 50% towards large and multi. and probably about 40% max in mid and small. So that's one shift I would ask him to make, obviously in line with, like I said, step up his SIPs by 15% every year, and he'll comfortably meet that goal with a buffer. That's his retirement goal, right? The second goal, that he spoke about, his child's education. Again, if we look at getting about 50 odd lakhs in the next 18 years, an SIP amount of clearly about $9,000 should get him to that goal. And again, you can do it in a mix of a 40, sort of 60-40 small and mid and 60 large cap, because the time horizon is good. Yeah. The other goal that he has, which is a more shorter term goal, that's I think it's about like 5 lakhs in 5 years. That I would urge that you would want to do a mix of debt and equity, clearly, where you want to put about 30-40% in fixed income funds, your corporate bond, sort of short term funds, and the remaining going to large cap funds. So we've actually listed down some of the short-term funds and the large-cap funds that he can look at. Those are the ones where you would allocate about $8,000 every month. So he'll kind of need to segregate the SIPs according to that, and he should comfortably be meeting his goals.
5 years is still decent. One of the goals also is 2 lakhs in 2 years.
Right.
So how does he get to it? And given the volatility that we've seen in the markets, does he move to debt already, or at least for a year be in equity?
Yeah. So I would say 2-year horizon, it should be purely in debt on the shorter end of the curve, really. So, your corporate bonds, your short term, your banking and PSU funds, those are the ones that I would ask him to invest, which can. So ideally, if you're looking 2 years hence, you probably just do a lump sum, so rough back of the envelope calculations, about 1.75 lakhs would yield you 2 lakhs at the end of 2 years at the current yields that we're seeing on these kind of funds. So that's what he should be looking at, parking that money right now, locking it in into sort of safer funds, so that he can grow towards that goal in the next 2 years.
Okay, Meshach, anything else we can help you with?
That should.
All right, thanks very much. All the best. Up next, Mr. K. Gopi Krishna is on the line with us from Telangana. Hi, sir. Good afternoon.
Hi, good afternoon. I'm Gopi Krishna.
Yes, sir. Go ahead.
I'm having a HDFC Mid-Cap Opportunities Fund, Aditya Birla Sun Life Mid-Cap Fund, Franklin India Smaller Companies Fund, SBI Blue Chip Fund, Canara Robeco Emerging Fund, Equities, L&T Value Fund. Each lump sum I have deposited during April 2017. At present, overall negative 2.35%. Shall I continue or switch over to another fund?
Okay, sir, I can understand your concern. It's absolutely valid. But Kaustubh, just a little background that Mr. Krishna is retired. Okay. And in light of that, does this portfolio, and of course these are all lump sum investments too, in light of that, does it seem a little too aggressive? How can he rejig it?
Yeah, so I would certainly think so, given his age and given his current status of being retired. I'm not sure if he needs regular income from this portfolio, or it's...
We can find out. Mr. Krishna, are you looking at regular income from this portfolio?
Not regular income. It's...
like a contingency?
Contingency.
Contingency. Okay. So that's good to hear. So that we don't need to move it away into completely risk-free assets. That's that's a plus point. He can stay largely invested in equity if that's a small portion of, and his regular monthly expenses and income is really taken care of. But the one thing I would urge him to clearly do is, because when I look through the list of funds, there are a whole host of mid-cap and small-cap funds. Given his age, I would seriously want to shift almost 80% of his portfolio into large and multi-cap funds, and only the remaining 15-20% should ideally remain in mid-caps. So we'll need to do some serious rejigging to his portfolio. So if I look at it, mind you, these funds are great that he's holding, but just not suited to his risk profile right now. So I would definitely want him to make a strategic shift towards some of the large cap funds and the multi-cap funds. So for instance, the HDFC Top 100 or the ICICI Blue Chip or the Aditya Birla Frontline, the Kotak Standard Multi-Cap, so these are some of the names that, the Mirai India Asset Equity. So these are some of the funds that he should be looking to switch into. Clearly, that's more suited to his risk profile. It will be, less volatile than what obviously seen a sharp drawdown, but it's better to course correct right now rather than, wait for the market to come back up.
Mr. Krishna, anything else you want to ask us, sir?
No, madam. Thank you.
All right. Thanks very much, sir. Thanks for calling. Up next, we have a query coming in from Rajesh Bishnoi. He's 26 years old. And, Kaustubh, this is going to cheer you up, right? Because we have a 26-year-old who has charted out clear goals. One is retirement. He has, he's planning for his marriage and the education of a child thereafter. He also has a goal which is pure wealth building.
Right.
So, very heartening to see all of this. Now, for retirement, he is investing in NPS since 2013. For tax saving purposes, he has chosen the Aditya Birla Sun Life Tax Relief 96, also the Axis Tax Saver since 2016. For his other goal, which is marriage and child education, he has chosen the Mirai Emerging Blue Chip and the HDFC Mid Cap. Here he hopes to achieve 35 lakhs at the end of 20 years, and he is investing about 2,000 rupees each. For wealth building, he needs 1 crore in 20 years. And for this, he has chosen the SBI small cap, the HDFC small cap, as well as the Reliance small cap. So 2,000 rupees each over here. Now, he wants to add one multi-cap and replace one of the small caps that he has. Which one should that be, and any other changes that are required?
So I think largely his portfolio is in line because, clearly he's very glad to see that. He's thought it out very clearly, actually put it into buckets. That's nice. I mean, it's an interesting approach. So I don't really see any major sweeping changes. The only thing I would obviously advise him is that he needs to keep stepping up his SIPs. If you look at the numbers, obviously he's started with like 6,000 in a couple of small cap funds. I would want to, keep increasing that, as you start earning more 10-12% every year, because that'll just keep, I mean, you have a goal in mind right now, but even if you can meet it at the current SIPs, you want to stretch yourself because that goal could be a moving target, So I think that's important. And B, if you're looking to probably move out of one of the small cap funds, honestly, all three of them are pretty well managed. But if I were to pick one, then I'd probably say the Reliance small cap is one that he can potentially move out and switch with one of the multi-cap funds that we recommend, be it the Mirai Equity or Kotak Standard Multi-Cap or the Franklin India Equity. So that's really that one change. And obviously, like I said, just stay the course, keep stepping up your SIPs every year, and you're pretty much on.
Yeah, I know there are a lot of lateral thinkers out there who allocate a fund to a goal, and which is, like you said, pretty interesting. But the markets are surging, and I'm going to hand it back to Mangalam actually for a quick check on what's leading this move higher. Mangalam?
Absolutely, Sumaira. So it's the weekly options expiry on the Nifty, so there is a fair amount of volatility, and right now the volatility is with the bulls. The Nifty has recovered almost 51, 52 points from the lows of the day, almost on the verge of breaking into the green as we speak, around 20-25 points in the red, and most of that is led on account of ONGC. The company reports its results today, so watch out for ONGC higher from the lows of trade. We have metal stocks not doing too badly as well. ONGC is now moved into the green. We have JSW Steel, Tata Steel, as well as Vedanta, all of them at the high point of the day. Not doing too badly is the Nifty Bank as well, now up by about 90 points, and that's primarily on account of ICICI Bank. That one should come up for you. ICICI Bank at the high point of the day, but the real star of the last 15-20 odd minutes has been the mid-cap index, currently higher by almost 80 points, outperforming all the major frontline indices, led higher by a whole host of stocks. We have been talking about DHFL and some financials, but watch out for India Cements. That one's at the high point of the day, and tomorrow's Friday. Today we have a movie releasing a sharp surge on PVR as well. What we'll do is we'll take note of the markets, also take a short break, come back, we toss it back to Sumaira. She'll answer some mutual fund queries, but we will not lose sight of the markets.
Hi, welcome back. You're watching the MF Corner, and I have Kaustubh Belapurkar of Morningstar India who's with me to answer the queries that are coming in. And Archana Bhavkar has written to us on Facebook. So, Kaustubh, her question is that she wants to invest in the Reliance Large Cap Fund, and should she, and importantly, should she do it now? So, interestingly, for everybody who's watching, at the Mutual Fund Awards that CNBC TV 18 had hosted late last year, Reliance Large Cap Fund was the winner in its category. So, Kaustubh, would you recommend that she invest in it?
Yeah, absolutely. So, I mean, one is, the fund is an extremely well-managed strategy, for the Reliance stable, and we have a lot of conviction on Shailesh as a manager, and It's kind of slightly differentiated from, we've seen the way he manages. He does take some concentrated exposure. That's really his style of management. And he's done an exceedingly good job across market cycles. And that's really shown up, obviously, in the way the funds performed. So we have a lot of conviction. And I would definitely urge, Archana to go ahead and invest. Timing is something, which is, there's no the right times always. So I think she should just go ahead and take the plunge. She wants to set up an SIP. Go ahead and do that. It's a great fund. Just go for it.
All right, Archana, go for it. And when you're investing in mutual funds, if you've chosen the SIP route, any time, I suppose, is a good time. Up next, Vinod Sundaravandanam has written to us on Facebook. He wants to know what you think of the DSP Focus Funds. I'm assuming he, too, is looking to invest in it right away.
Right. So this is slightly different. So, if you look at the Focus Fund, right, obviously the mandate itself is, you've got to take a concentrated portfolio, stick to about, between 25 to 30 stocks. And that's really how the portfolio has been constructed. It's got a large cap bias, which is good, but obviously it comes, given the concentration, there is that element of additional volatility that does come in. So I'm not really sure how the rest of his portfolio is, sort of standing. But, for instance, the earlier question was quite easy because a large cap, like we always recommend as a core holding, so we can go ahead and do that without looking at the rest of the portfolio. But here, it'll be interesting to understand really what the rest of his portfolio is. If he's already got enough core holdings,
is in place,
then I don't mind him adding maybe like 5% but otherwise, he needs to first build his core with large, mid sort of, strategies.
Okay, in fact, I think you've also answered the next query which has come in. Kaparuthu Venkatesh has written to us on Facebook and he wants to know about the ICICI Value Discovery Fund. So this follows the same hypothesis, right? That get your core in place and then figure out the rest.
Actually, slightly different take on this. And, we've spoken about this, the value sort of style, right? That's, it's kind of, a slightly differentiated strategy to, the normal growth or growth at reasonable price that most of the managers would tend to follow in a market like India. So the value style brings in that additional layer of diversification. And why is that important? Because, you look at 2017, momentum growth did really well, but value was lagging. But people kind of tended to stay away from the value side of the market. But 2018, that turned around, right? We saw traditionally value funds did, kind of protect capital much better than some of the more aggressively or the sort of those strategies. So I think that is a useful sort of learning even as an investor that you need to, while, we're a growth market, you want to have a large proportion as growth-style funds, but value adds that additional layer of diversification. It's a very different style. There are some good value managers, Renal being one of them who manages the strategy. I would definitely, take that as an additional part of my portfolio, to complement the rest of the portfolio.
All right, so value has a place in your portfolio as well. Anant Venkat Krishnan has written to us on Facebook. So he has investments in the Axis Blue Chip, Axis Focus 25, Axis Multicap, Tata Digital, UTI Equity, as well as the Tata Banking and Financial Services. So he's taken his focus to primarily Axis and Tata. I wish we had him on the line so we'd know actually, what is the basis of his conviction. But nevertheless, would you assess his portfolio?
So I would say that one is you want to, because there are fund manager styles or fund house styles, so you want to diversify across a little bit there. I think that's important because you will tend to, when now obviously the focus is like we spoke about the earlier one is a focus strategy, but it does still have a large cap bias, so it will in a sense mirror some part of the blue chip strategies, and obviously he's got a couple of IT funds that are there, so it's kind of. He's got some elements to the portfolio, but I don't want him loading too much of sector, biases in there, especially technology. We've seen, we've seen some sharp run up in the previous year, but it's not something that you would expect to continue at such a pace. So I would want him to kind of diversify across fund houses, and again, then build that core holding through large multi-cap funds. Really, I think that's what he needs to focus on.
All right, Anant, I hope you were listening in to that. Kaustubh, thanks very much for taking the time out and for answering so many queries. We'll wrap up then on Mutual Fund Corner. Thanks for watching.